Real estate and construction are huge industries in Canada, accounting for roughly 40% of GDP growth in recent years. In this chart, the brown bars highlight the annual change in real estate prices from 2016 to the forecasted numbers in 2018. And then we have the orange bars, which show the yearly percentage change in the number of sales over that same time period. And what the data suggests is that within the next year, a slowdown might be coming to these key real estate markets. We've seen skyrocketing real estate prices in markets like Toronto and Vancouver, Brian, but from the looks of this chart, it looks like things might start to cool and it might continue. So what's the most important thing this chart is telling us?
This chart really, to my mind, is about a pause. So if you look at some of the strong gains we've seen in 2016, 2017 on the price side of things, we're looking for a little bit of an adjustment as we move into 2018. But really, it's quite minor in the context of those strong price gains we saw in the 2 prior years. What's driving that is, first of all, rising interest rates and stretched affordability. But in Ontario in particular, in Toronto, we're also getting the impact of all those new measures from the Ontario government, which should also act to cool the market. But again, you have to put that small decline in the context of those major gains we had running into last year and this year.
Now, if real estate starts to cool, and assuming or understanding that it accounts for approximately 40% of GDP growth, is this going to cause a massive slowdown in the Canadian economy?
To my mind, no. Certainly the 40% in recent years is definitely an outsized contribution. And as we move away from that, there's other factors that are going to step up and sort of fill the growth void, so to speak. One of the areas we've already seen strong performance in is energy investment. That's coming back from a 2-year decline. Definitely a positive sign there. And the government spending. So the federal government last year's budget announced a lot of infrastructure spending. It takes time to get that money out the door, but it's been about a year, and that's about how long it typically takes. So that's going to come in and also help support growth through this year. So you're really getting these other factors, stepping up to the plate.
Now, if I'm an investor and I hold a lot of real estate, is this the time to start selling it off and invest in stocks?
I'm not sure I would act that quickly. A lot of what we're talking about here, again, we're talking more about a pause in the market rather than a major correction. And certainly these factors, rising rates, stretched affordability, these are more longer term headwinds. We're not talking about flicking a switch. So I think it's more a story of as time goes by, real estate may become maybe a less attractive asset class on a relative basis.
Thank you very much.
Thank you.